Welcome to a Wiser Retirement podcast. Before we get started with the episode, I want to tell you about a new ebook available on our website called Buyer Beware. Why do they keep trying to sell you that annuity? This ebook covers the various types of annuities, negatives to owning annuities, and better investment alternatives to annuities. To download this ebook, you can click the link in the episode notes or go to wiserinvestor.com and you'll find it at the bottom of the page. Now on to today's episode.
Welcome to a Wiser Retirement podcast. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith, guiding you to financial freedom. Today's my co-host, Robert Swarthout, founder, CEO, and portfolio manager of Teton Crypto Capital. Hey, Robert.
Good morning.
We are going to cover today several topics. Obviously, there's been a lot of news changing in the crypto space. But first, let's just get started talking about how to have a secure digital life. I think this is something that is very relevant to today. But I mean, even in the very beginning, you know, before Coinbase was ever established, you had these wallets, right? Mm-hmm. And you had codes to the wallet, and you know, I don't know if those, I don't know where any of those famous stories ended where, you know, there was $500 million and no one knew the key.
Yeah,
you know, the key was lost, person passed away.
Yeah, you know, the thing with blockchain is they may not announce that they have access to it, but everything's public on a chain. So if stuff starts moving out of a wallet, you know that they finally found the keys.
That's true.
So you know, I would imagine the last third of each of those stories you probably don't hear about until something else comes, some news like, oh, the funds from that wallet are moving. So,
right.
Yeah, you know, I think having a secure digital life is important, even outside of crypto. You know, there's, you know, obviously people have, you know, say a credit card, and you know that's part of your digital life, and a lot of times those get compromised, and the banks deal with the fraud and all that, so your card just gets reissued. You don't have to think about it.
Right.
But you know, it's still a hassle. So there's things that you can do in your life that can help prevent, you know, some negative side effects from happening. So maybe we'll just start off with passwords. You know, I can't tell you how often I'll talk to somebody and they'll be like, oh yeah, I've got my password memorized. And I just kind of like cringe.
Right.
Like, they said password, not passwords, and they have it memorized. Yeah, you can have one or two memorized, which is probably good, but like you have a lot more passwords in life than just one or two.
Right.
So there's password managers out there that, you know, whether it's be installed on a phone or a PC of some kind, or, you know, laptop, that allows you to kind of store, you know, as many passwords as you can think. Logins to websites, and they can store other details as well, like credit card actually.
Yeah.
So it makes it easier to buy things online. But at the end of the day, you know, having a secure way to store passwords is important. And specifically, those password managers help you generate unique passwords for each service. So you might get an email from time to time that says, you know, we're just letting you know we were compromised. Please reset your password.
Right.
And if you've used the same password in all these different websites, that's probably a problem for you, right? Because now it's out there.
Because a lot of time the username is just your email.
Exactly.
So
and you're probably using the same password for your email address, which is just terrible. That's like the single point of failure, because you can reset everything if they can get into your email account.
There's a story from a disgruntled employee that knew that the boss always used this one password phrase for everything, got into his Apple login and remote wiped the guy's laptop.
The good things of technology and the bad things of technology.
Right, exactly.
Yeah.
So there's like there's one password manager, which is really good.
Yeah, I mean,
there's LastPass, which has gotten into
it's
in the news recently, issues. But it's better than one password exclamation point for everything, right?
Exactly. And you know, sometimes you go to a website and they have different requirements for passwords. So the password generator in these apps you can kind of, you know, configure it to generate a password and just, you know, whatever that website.
What you probably should be using is that password manager inside your web browser.
You're saying you should or shouldn't?
Should not. Like, I just don't know if I'm comfortable with Chrome.
Oh, yeah, yes, the one built into Chrome.
Yeah.
It's not nearly as feature rich as, you know, the ones that we may be suggesting, but like it's better than nothing.
That's true.
But you're likely not coming up with unique passwords each time.
So the idea is that you remember the password to get into your password manager.
Correct.
And then after that, the password manager generates a unique passcode for every single login that you would have that you would never remember.
Correct.
It's not associated to your dog, your wife, your
nothing. And it's a random string of characters, numbers, and letters. And
exactly.
A lot of times they'll say a minimum password length of say 12 characters. Well, a lot of times they'll take up 30. Well, you might as well make it difficult to be guessed, or brute forced. So password managers, I think, are like table stakes these days to having a secure digital life. And the longer the password, the better. And what I like about the password managers, yes, they manage passwords, but again, they can manage. You can put some secure notes in it if you have, like, say, a tax ID for a business that you run. You can store those kind of things in there as well.
Right.
So, you can even store, social security numbers and all that kind of stuff. I mean, if you decide that you want to, I guess go all in with a particular app.
Right. And then make sure you're leaving that master password to someone.
Absolutely.
Actually, Apple's kind of started to evolve in that area too, because you can name a person.
Yes, if you're deceased, they can kind of prove it to Apple. Then it's like, how do you will on your digital life,
right?
And that's something that's being figured out in just the digital life in general, and also in crypto. That's another, like, how do you keep assets? So there's some companies trying to solve that problem there as well.
Two-factor authentication. I mean, that's annoying.
It's annoying, but that's the solution to
that
having
is
bad passwords.
A lot of the solutions. So being a wealth management firm, for us, we get attacked quite a bit. In fact, I think we're probably going through one now. Anytime you hire a new employee, people in the, whoever they are, Pakistan, India, wherever, they are attacking one of our new employees right now and asking for acting as me, but they don't have my email address. They just make it very similar,
right?
And saying, "Hey, can I get your phone number?" Because if they can get that phone number, then what? Two-factor authentication has a better chance of working, right?
Yeah, I mean,
if they can get the password.
Yeah, that's an example of social engineering, and actually, this is a great time to talk about it because, text-based two-factor authentication is important. I think that's like, if a service has it and they don't require you to use it, they're probably doing you a disservice and themselves.
Yeah.
So they should enforce it. I'm a big fan of the ones that allow you to use a separate app to generate the code.
The authenticator.
The authenticator. Well, there's Google Authenticator, there's Microsoft's got one, or these password managers can also act as the storing the authentication code, so you don't have to have a secondary app, so it keeps it all in sync.
A lot of the password stores actually will allow you to share a password, like with a family member, but not actually give them the password, which is pretty cool.
Oh, that's
cool.
So
I can share a password with an employee,
right,
to get into something, but they don't know what the password is.
They can't see it. Yeah.
Yeah. They have to log in through that. You have to have the right URL, obviously.
Right.
So the software would recognize it.
Yeah.
Which is pretty cool.
That is cool. So when it comes to two-factor authentication, if you have a choice, I would say prefer a token-based one, so an app-based one over text, receiving it via text message.
Right.
Because you could be attacked in the sense of somebody trying to steal your phone number, which gives them access to the two-factor authentication. This happens frequently when somebody gets hacked in a crypto environment because, somebody goes to, I don't know, choose your favorite cell phone store. They social engineer an employee there to say, "Oh, my phone's messed up. I need a new SIM card. Please move my phone number to this SIM card." They pop it in their phone, and they've basically hijacked your phone number.
Oh, wow.
So your phone's gone. They have your two-factor authentication codes, and they probably already have your password details at that point. They've been waiting to get, and then all of a sudden they're in.
Yeah.
So I cringe when I see the only option to be a text-based thing. And there's things you can do at the cell phone companies. You can require them to take a number, like you can call almost like another password of sorts, but it's just a long string of numbers. Like, for instance, AT&T, you can go in and they require to have that from you to make a change to your account. So that person that is trying to social engineer them, it's just adding layers of complexity to it that is cumbersome if you're trying to make your own changes at your cell phone carrier, but it keeps them from doing something that you don't want them to do, for instance.
So I found it interesting you want to talk about this on this podcast. Are you seeing like an uptick in theft of crypto? Or
yes, theft in crypto, and also what kind of gave me the idea of just doing this segment is just recently, there's been some high profile people in crypto that got attacked. In particular, they got they call it SIM swapping, but they got SIM swapped attacked. And, and not actually their crypto got stolen, because I think that was started to happen, but their Twitter accounts got taken over because Twitter uses text-based authentication.
Yeah.
And it's just kind of like, it just made me think about it. So at the end of the day, it's definitely something that, once you get it up and going, maybe that takes a little bit of time, and that's frustrating, and you have some, break-in period there. But once you're up and running, it's honestly a more smooth experience than having to like type everything, because all these managers have like a browser extension where it pre-fills it for you.
Yeah. You
don't really think about all the complexities that you're kind of going through. You just, click, 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 click. So.
Right. So what about just a good old fashioned, you leave your laptop on an airplane? I mean, that's a huge risk.
Yeah. I mean, it depends. I haven't owned a Windows PC in probably 15 years. So I don't know
right, same.
what kind of options there are on those. I know a lot of Macs these days have the ability to do like a fingerprint scan.
Yeah.
I turn it on. Like if you're not doing it, or if you have a phone that has the Face ID, and obviously I think everybody does that these days.
Right.
Like turn on the options they provide for you. Like if not, you're just being silly. But a lot of stuff is stored, quote unquote, in the cloud these days. So if your laptop gets stolen, it may not be such a big issue. Obviously, if you're letting the browser store your password for you, using the thing that's built in, then all of a sudden they get access to your computer, maybe there's a risk there. So it's probably another reason not to store your passwords that way. But
I think probably the phone, your cell phone could be more dangerous. Everything's on the phone now.
I mean, there's options on the phones, and even, I have something enabled on my laptop that if somebody tries to type the wrong password too many times incorrectly, it literally, the phone and or the computer just like wipes itself.
Yeah.
Like, yeah, it's a headache if somehow I did that to myself, but like it just adds that, that layer of precaution there. So
what crypto specific advice would you give people when it comes to safety or having a secure digital life?
Yeah. So just generally, like, I think it's always worth spending the time to understand what it means to custody your own assets. Does that mean that you need to be using all this crazy DeFi stuff? Probably not. But at the end of the day, you need to understand what it means to, if you have cash, you're keeping it in your wallet. It's no different than having crypto, and using a hardware wallet is what they call it, to kind of store those functionally passwords to those wallets. Again, you can kind of intertwine that back into having a password manager. There's some recovery stuff that you would need for a hardware wallet that you can kind of store in a password manager if you need to. But, it just, if the SEC sues your favorite exchange, it seems like their favorite thing to do these days.
Right.
Like
after they approve the exchange.
I'm sorry?
After they've approved.
After they've proven to go public, and yes, all the other craziness. Correct. So say they just get a wild hair and they decide to sue your favorite exchange. The laws in the U.S. right now are not set up in a way that if they go through bankruptcy court because of this, say it's an extreme scenario, they go through bankruptcy court, your assets are not your assets. You functionally have lent them, even though it's not a lending arrangement.
Yeah.
It's not in a trust. So you're kind of in line with the creditors and probably behind senior creditors. So you're likely not to get back one-to-one what you put in. So the idea that you need to self-custody, you take it off an exchange. Again, I use the analogy, use an exchange as a drive-through, not a destination.
Right.
So you go there, you get your stuff, you leave, and you custody it yourself.
So we have a podcast that we talk about. We talk about that a little bit. Has any of that really evolved? I mean, to me, it takes a little coding, but I know it's not that hard. It's
not that hard. I would say we have talked about in a few other podcasts. The user experience of having your own wallet, managing it, is slowly getting better. It's come from such a technical place. It just takes a lot of evolution. And the more people that come into crypto, I think the easier it gets because they continue to push it out. Mm-hmm. Does it pass the grandma test right now? Probably not. The grandma test being, can you just ask your grandma to go do it and she can figure it out?
Is there a good source for that? Is there a good website that kind of like, this is step 1, this is step 2? Or would you just Google it?
Well, it's probably more specific to the wallet you choose to buy. So it's hard to give general advice there.
Okay.
But
are you buying that in the App Store? Are you going to a website?
You're never buying it off of Amazon. You're never buying it anywhere but the manufacturer's website.
Okay.
Because you run the risk of somebody selling one on Amazon or some other website, not picking on Amazon here.
Yeah.
And they have replaced the software on it and it's hacked already. And you would never know.
Yeah.
So you want to buy it direct from the manufacturer. They run specials all the time. So it's not like you're going to be paying
who's
more.
they? Who are some manufacturers that you can trust?
Ledger is one. There's another one called Trust Wallet. There's...
are they like mailing you a drive essentially at that point?
It looks like a USB stick, effectively. I mean, they can sometimes be bigger because sometimes they put screens on them.
Okay.
But, I think just searching on Google for, hardware crypto wallet.
It's in there. It's coded in there with a password. But when you're disconnected from the web...
Correct. Sometimes they're required to be connected via USB cable to use them, or they can be done with Bluetooth. I prefer the USB cable ones over the Bluetooth because then I know when it's connected.
Right.
There's no this thing decided to have a life of its own. That's a bit of the paranoid side of me when it comes to that. But it's just, you're only buying it from the websites. And, when I say Google it, you got to be careful. I guess you got to be careful too that you're not going to some other spam website.
Yeah.
So it just shows the complexity here. If we could fast forward probably a year, 2 years, not far from now, I think custody solutions are in place where I feel like you could leave them there and the laws and regulations are in place that make this complexity not necessarily be a necessity for most people. Like when you can, you're not custodying your own stock certificates. Like that problem is solved. We need to get there with crypto. Yeah. And the laws need to catch up to allow that to happen. I mean, NASDAQ claims that they're about to launch a custody solution for crypto, probably just Bitcoin and Ethereum up front.
Yeah.
And they would expand it, but you got to get your toes in the water at some point. So
interesting. All right. So let's shift into crypto news. I've seen on Twitter, a lot of people are screaming that a CBDC will be in place within a year.
If you live in Palau or if you live in some other country that's...
Well, it kind of goes along with things that you said in the past. I mean, is the SEC... I think the SEC is not trying to clear the way for the banks at this point with all these lawsuits. I think they're just trying to say we're going to be in control of this versus other agencies potentially. It's like they're fighting for turf, I guess, of some sort.
They are definitely fighting for turf. The SEC is trying to get... It's in a turf war with the CFTC. Right. Okay. That turf war has been ongoing and continues to kind of happen. The CFTC, in my opinion, is acting like the adult in the room, and the SEC is a spoiled little brat that is making up stuff as they go. So you have that, but we have, in some sense, I'm going to jump ahead here in our notes, but the SEC has been saying no to Bitcoin ETFs ever since they were filed. The first one I didn't realize was filed over 10 years ago.
Oh, wow.
That was the Winklevoss twins of Facebook fame. They have been in crypto a good while, but they filed the first Bitcoin ETF in 2013, 14, something like that. Probably a little early.
Yeah.
Obviously, because it didn't get approved. But even back then, the markets weren't where they need to be.
Right.
And then you fast forward to recently, and all of a sudden, all these applications from major financial TradFi players are all of a sudden being submitted for...
Yeah. Now BlackRock.
They're doing theirs in conjunction with Coinbase. So Coinbase is going to deal with the custody and all that stuff. So I think that, did the SEC send out the bat signal to say, okay, TradFi players, it's safe to file your Bitcoin? Because we have 4 in the notes here, and there was a 5th one that was announced after these notes were put together so BlackRock, Fidelity, WisdomTree, Invesco, and Van Dyke are all filing their Bitcoin spot ETF, all within, call it 8-9 days of each other.
I mean, if they were to all get approved, what'll be interesting is how cheap owning Bitcoin could get, because it's all the same thing. So eventually they have to compete on price, right?
They compete on price. And from an investor standpoint, once there's an ETF, if you want to own Bitcoin, the idea of having to custody it is not an issue anymore, because that is part of what they have to do.
Other than BlackRock or whoever.
Well, I mean, yes, but that's part of their business, right?
Yeah, exactly.
I guess if something was stolen, then that may be bad for that ETF. But in theory, these ETFs are going to track the price of Bitcoin. So it's just been fascinating. So back to your thing about like the SEC, I think, and this was part of the quote unquote conspiracy theory we talked about when Don was here 3 months ago.
Yeah.
Where the SEC was trying to slow down the crypto players to let the TradFi catch up. Well, it seems pretty obvious what's happening right now. And you even have like Congress, in particular the Financial Services Committee, getting really fed up with the SEC. There's this undercurrent that maybe Gensler has been so aggressive in his approach to crypto that he's becoming a political liability for the Biden administration. I don't know. Possibly. I could see that being the case. But he's there's also rumors that they're trying to get him to leave too. So I don't know. It is odd the amount of time and resources the SEC is spending on the crypto market, considering how small the crypto market is and all the other stuff the SEC should be doing.
Yeah, but at the same time, they've had some big blowups too. FTX.
The blowups, they were working with FTX.
Right.
So it's like,
well, the people in the case didn't understand what was happening clearly.
Right.
But at the same time, FTX did keep his company books in QuickBooks, and
right.
It was probably so much money moving around, it would take him years to figure it out.
Right.
Agreed.
I don't know. I could go as far as to think that the SEC had an inkling, but there were, I don't know if money was being changed hands there or something. Yeah. But at this point, I don't believe anything the SEC says at face value. So.
It's just the whole thing with Binance too now. So you have Binance, you have FTX implode.
Yeah.
And I felt like Binance was kind of dirty, but I couldn't really put my finger on it.
There's always been like suspicion around Binance, right? Because they won't claim where they're based out of and all these kind of things. They do things that may be positive for them running the business, but definitely add suspicion in this like cloud around them.
Not very transparent.
Right. But yeah, I mean, since the last podcast, the SEC has sued Coinbase. It was going to be Binance on a Monday and Coinbase on a Tuesday. This was 2 weeks ago.
Right.
And they're very different lawsuits, very different allegations. And then at the same time, if you rewind, we talked about in the last podcast, Coinbase sued the SEC to make them give an answer on whether the rulemaking.
Yeah. Right.
And then now the judge in the other case where the SEC is suing Coinbase is like, okay, what about that over there?
Yeah.
Like the judges are paying attention. And at some point, the SEC is building a house of cards here, I think, that like is not good for them.
Right.
And the whole idea that they're for investors or retail investors to protect them is just laughable at this point, because I think they're doing more damage than they ever could do harm.
So when does it all kind of come tumbling down? Because we believe that the SEC versus Ripple would rule Ripple's favor. The Hinman documents,
correct?
Do they not support?
Oh my gosh, the Hinman documents just show the hypocrisy within the SEC. Specifically, the last administration, that was Jay Clayton, the chairman, and then Bill Hinman, the head of corporate enforcement or enforcement division, whatever it's called. The evolution of that speech went from being titled, crypto clarity or something like that to being the ether speech. Like,
right.
It just shows the sliminess of the SEC. How many, no one's really tallied it up, but I would imagine that there's at least 2 or 3 laws that he broke, Hinman in particular. And, the statute of limitations has run out. So this is kind of really frustrating. It's like, why did we have to do this? There's, as part of the Binance lawsuit, Binance has kind of countersued in some level and alleged that there's bad things going on at the SEC. And 2 of the people that signed off on that are ex-people from the SEC that would have been in the seats that Hinman was in.
Oh, got it.
It's just, layer upon layer of slime. So, the Hinman docs, while there was no bombshell in them, like saying, that they thought XRP was not a security or something along those lines, it did kind of just lay the groundwork about like the SEC. There was multiple people in the SEC saying, by doing this speech, we're going to create more uncertainty in the market. It's going to be harder to understand what is or is not a security. There appears to be some level-headed people at the SEC.
Right.
the ethics department saying, you're making money from your law firm, you can't continue to talk to them. He continues to talk to them. Like, it's just layer upon layer of bad. So, I think if anything, those Hemming docs help, if Ripple ever has to enact their fair notice defense. I don't think it gets that far for them. But if they ever had to, they got a pretty good case, because the SEC is saying this will happen. It did happen, in the sense that it made things more uncertain in the market. It wasn't clear how would the executives of the company know something that the SEC is not willing to say.
Right.
So
taking it back to like 35,000 feet, when you're looking out over the next year to 3 years, how do you think the crypto landscape changes based on what you're seeing today as an investor in crypto? Where do you see the where are you most concerned about, and where do you see the most promise?
It's a great question. The promise is that we finally get some regulation in the U.S. The rest of the world is leaving the U.S. behind. Like, it is insane. This is probably, I've said this ad nauseum on here, but like, we need regulation, and it's becoming more and more clear just how off base the U.S. is handling.
Because you think
this.
the regulation would bring legitimacy to the crypto space,
right? And it would, and you're not trying to take banking relationships. I mean, like, the whole choke point 2.0 thing that came along, basically trying to debank the crypto industry.
Right.
It's just, it makes me sad as an American that we're having to, it feels like a banana republic right now, the way some of this stuff's happening. But 3 years out, I think we got clarity. It's certainly some clarity via court cases. So that's going to be one-offs. It's not going to be industry-wide. I think within 3 years, you potentially have a new administration. Things are different from that perspective more broadly. But you even have, I think, the third week of July, at the committee level, there's going to be some vote on some crypto clarity acts that are coming out of this. I think the Senate at that point, or no, the House, excuse me. So at the beginning of the year, I thought we might get some crypto regulation this year. A month ago, I was like, there's no chance it's happening until we have a new administration. So a year and a half from now, at the earliest. But now, there's an outside chance that they get something done this year. Interestingly, it's becoming more bipartisan. The amount of Democrats that are like not happy with the way Democrat senators and congressmen and women that are not happy with the way that Gensler's handling this is becoming probably too much to like ignore. And then there may be enough of a vote to kind of get things to move through. So I'm positive, I guess, certainly on the 3-year perspective. The 1-year time frame is a little more hazy. But we may talk again in a month or 2 months, I guess, and have much more clarity about what may be happening in the short term. So,
let's kind of wrap up with going. We look at the major players that are coming into this space. So before, I think investors thought, oh, this crypto thing, this Bitcoin thing is just out there, and that's what the kids are doing. It's crazy. It doesn't have any real value.
Yep. Magic internet money.
And now, yeah, exactly. And now all of a sudden, I call it Fortnite money, right?
Yeah.
Now all of a sudden it's showing up at Schwab and BlackRock. These are major asset players.
Yeah. I mean,
how do you think that changes the landscape? Do you think it pushes out the small players, or does it just make it a legitimate asset class, if you want to call it that?
Sure.
Because we don't even know what it is yet.
Yeah.
Right?
I mean, to me, I'm willing to go on record. It is the new asset class. People need to start thinking about it that way. I've long believed that this is not an if, it's a when.
Yeah.
And I've thought about that recently. I've thought about that for a couple of years. So all this stuff that's happened more recently since last November, and then stuff with the SEC this year, to me, we're just kind of like theatrics to slow. Again, it kind of goes back to what we thought was a conspiracy theory, like to slow down the new players to allow the incumbents to kind of from TradFi to come in and get their space. And we're seeing that so fast and so heavy right now. It's to me, when they finally are public about it, it only legitimizes that idea. Right. And just this week, I mean, you kind of alluded to it, like Schwab, Fidelity, and Citadel Securities, they have kind of combined to do a joint venture where it's a crypto exchange that you can't necessarily go trade at. So I'm guessing it's some kind of software behind the scenes that will work on their platforms.
Right.
And Schwab is I think the one that was leading that charge, if I'm not mistaken, but Citadel is the one that's running it. But it's just they're only starting with Bitcoin and Ethereum. And I think that's the one. Well, people think that Ethereum has clarity. It does not have clarity. So sometimes it gets lumped in that bucket because people are assuming incorrectly. But, that's one example of many. You have, again, all those ETF applications, and, you have NASDAQ talking about they're launching their custody solutions. And that's just here in the U.S. There's a whole bunch of companies. Credit Suisse is doing stuff about custody, or they filed an application for it. So things are happening. And it depends on where you get your news, depends on which perspective you're going to have on crypto,
right.
To the extremes. But, if you're willing to parse out the news, there's a lot of good that's happening. It's not as sexy and make all the headlines, as some of this other stuff, but it's,
right.
It just building blocks. So,
well, thanks for your time today, Robert. We bring Robert on once a month to talk all things crypto, partially because, it's the future. We know it's going to be there. We just don't know exactly, I guess, what it's going to look like. And I think as advisors here at Wiser Wealth, we have to be on top of what's to come, even though right now we don't have it in our portfolios, but it's something that we're certainly monitoring. As fiduciary advisors, it's hard to recommend crypto as as an asset class when it doesn't have the regulation that you're talking
Correct.
about. But I think once that framework is set and there's playing grounds or playground that is set up fairly,
right.
then it makes sense. I mean, there's so much stuff that can happen. Which is why we started talking about the safety of it and storing your crypto, and that becomes our liability if we start putting that into portfolios, at least in major ways. We do have a couple of episodes if you want to focus on crypto. Episode 167, the SEC and crypto. Episode 161, why crypto is so confusing to the average investor. Feel free to reach out to Robert. Robert, what's your website?
The best would be via email, robert@tetoncryptocapital.com.
Reach out to Robert directly if you have crypto type questions or interested in investing in his fund. Thanks for listening.
Take care.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced and edited by Ken Hoadley.